Julian McCormack from Platinum Investment Management. What do you believe are the biggest emerging trends that are going to impact 2023?
Good question. So the trends that will impact 2023 will be, in my view and our view, transition from obsession with interest rates and inflation to the emergent reality and acceptance of a recession. So we have never gone from periods of high inflation to periods of low inflation, absent a recession. That takes quite a long time, and it takes quite a long unemployment rate. So to make that more concrete, we've never had average hourly earnings of 5% plus return back towards target of, say, 3% without a 10% unemployment rate. That's clearly going to affect the environment in 2023, in our view.
What are your preferred emerging sectors or stocks?
So in terms of preference for stocks and sectors, the rather gloomy thing we'd suggest to people is you actually want to have a lot of cash, and if you can, you actually want to be short markets if you're confident to do that. But put it more broadly, you want to be thinking about preserving capital in this kind of environment. We don't invest through recessions very much, and we don't invest through bear markets very much. We only get a few in a career. So it's important to preserve capital through those. That's for the next 18 months or 2 years or 6 months. We don't know, but it's for the immediate term. Longer term, out the back of a sort of investable timeline of sort of 3 to 5 years, then we're beginning to think about sectors that benefit from a much higher nominal growth world, right? There's no such thing as stagflation. That doesn't exist. If you go and check growth rates in the 70s, they were very high, right, by modern standards. So you either grew at 5% real or 0 real. You didn't grow at a steady 2 or something. It wasn't stagnant at all. And also the sectors that benefit from a high nominal growth world are very different to those that worked in the last, say, 10 years, in the last investing cycle. So it won't be, stable consumption type plays like a Nestle, and it won't be long dated tech type plays, say a software as a service type thing. The billionaires of the next cycle will be much more like the billionaires of 2 cycles ago. So, think about the emergence of Twiggy Forrest or Ike Batista in Brazil. The kind of things you want to be thinking about are energy, clean energy and the energy transition, battery metals, metals and mining in general, clean tech in general, so plastic replacements, or that kind of much more real world type exposure.
What emerging trends should everyone learn more about, and why?
So in terms of emerging trends, people need to understand what it means to go from a low inflation to a high inflation environment. And I think most people think that is just a change in prices. But think about it. We don't go from a world that has everything on average going up in terms of price by 2% to everything in average going up by 8%. There's a wild volatility that creeps in terms of pricing between different goods and in terms of pricing through time, right? So that is a very, very different environment. You cannot afford to pay high multiples in high inflation type environments. It's a very, very different environment in which to invest. So much more focus on cash flow and free cash flow, much more focus on dividend and sort of return immediacy, because long dated promises just cannot hold their value in the kind of inflation environment that we think we're in quite durably here.